been a better position to be in this year. But I just add some context to, we have not been saying that tech has bottomed. I am beginning to say that. The bottom is not a single point. It is a forming of a bottom, and I think we're in the early stages of that. In particular, I think we've seen some positive signs regarding Micron, for example, guiding down by 20% last week, stock closing down 3%. And I think you see this hot jobs number today. The expectation is that rates are going to be going up, and yet the market hangs in there. And so I think this is encouraging for big tech. And I would just kind of point to this, is that at the end of the day, for the June quarter, when commentary comes out from all the big tech companies about September, I would be bracing yourself for bad news. I think that the smart money would say that the commentary is going to be negative about September. I believe most, but not all of that is priced in. And so to kind of finish out the thought, Dom, is I think we're going to hit a bottom probably after this earnings season. And part of it is not just because the commentary, I think, resets a bar, but more importantly, the market looks 6 months forward. So the market's mentality, especially with big tech, is already in early 2023. And I suspect that some of these revisions, downward revisions to numbers that we're going to see in the next few weeks sets up for an easier bar in 2023. So as you kind of play this forward, think about the bottom forming over the next couple months. And I think 2023 is going to be a great year for tech. I was not saying that a year ago about 2022.
So if 2023 is going to be a great year, Gene, what's the big deal about September and what companies are likely to say and what you think we're likely to hear?
Well, the important part is just resetting that bar. And I think that what investors want is for companies to exceed expectations. They don't want surprises. So the theory is that the September quarter is, I think, the first true reset quarter. We've looked at the commentary from companies after they reported, or when they reported their March quarter, the commentary about the June quarter. And we looked at 20 of the top tech companies, and of those, 6 had negative commentary about June. There was some commentary, other ones that had some commentary about Eastern Europe, but as far as the macro, it was 6. I think it's going to be more like 12 or 20 will have some negative commentary. But Kelly, just to answer your question, is that I see that as kind of a changing moment here. It allows investors, tech investors in particular, just to take a deep breath and say, yes, we've been waiting for these cuts. Now the cuts have happened, and now we can start even more fully embracing what should be easier comps in 2023.
So, Gene, one of the reports we did earlier today was this notion that many of these mega cap technology and comm services names are kind of hovering back to around their 50-day average price on a rolling basis, right? They're starting to get back a little bit of positive momentum. We're talking, of course, the Apples, the Amazons, the Alphabets, the Meta platforms, the Teslas, of the world. Do you have some top picks there? Is it mega cap? At one point, just in the last couple of years, we used to call them a safety trade.
I think it is. I think portfolio should have a balance, obviously, of some of the safer ones, especially in this market in front of this commentary that I'm predicting for the commentary about September. And to answer your question is that I kind of don't think I do not believe all big tech is created equal when it comes to a safety. And the safety experiment that we believe is that ultimately which companies are going to provide earnings upside in early 2023, which are the best positioned big tech companies to do that. And I'll just kind of put Tesla on the side. That could be up or down 30%. I think there's massive upside in that over the next 5 years. Put that aside and just think about the core. What are the 3 top? I would put Apple, Amazon, and Meta for all different reasons, but the same general principle is earnings upside starting in the March quarter. And maybe just to fill in quickly in terms of why is that with Amazon? They've been in big investment phase. They usually will show some profitability after that. And I was encouraged to hear commentary from Zuckerberg recently about some tightening of hiring. That is a different language that he's used in the past. And that, of course, translates to better profitability. It'll take a few quarters to get there. But Dom, that's where safety is companies that are strong, Apple, Amazon, Meta, that are thinking more about earnings upside early in 2023.
Gene Munster at Loop, the 3 top picks, Apple, Amazon, Meta platforms. Thanks very much. We'll talk to you soon.
Thank you.